The last week was really interesting in the pound dollar currency pair. Primarily from a data perspective, we had inflation data from both the UK and the US, retail sales from both as well, and a few other pieces of data throughout the week, which made the week itself really fascinating and created some interesting moves in the currency pairs. It also meant that the markets in both cases were no longer pricing in another interest rate hike basically at all. In both, there was a small chance in the markets that we could see one more rate hike. And in both cases, that has been almost entirely wiped out. And again, in both cases, markets are now pricing in an interest rate cut by the end of the second quarter. So some symmetry between the two there from the UK's position from a point of very high inflation and inflation expectations, and from the US from a point of resilience to slightly less resilience in the economy, and obviously lower inflation too. This week's another big week in both cases too. Not necessarily from a data perspective, although there is a scattering of releases throughout, but more from an event perspective. You can see from the calendar on the screen now, we've got a few events this week which are really notable, one of which actually isn't even on the calendar. So the first one that stands out is the Fed minutes on Tuesday. Now, that should tell us in which way policymakers are maybe leaning. We didn't get economic projections, remember, at the last meeting, so we don't have the benefit that we do from the quarterly meetings being September, December, March, and June. But we did get plenty of commentary in the aftermath, so I don't think there'll be too many surprises from the minutes themselves, but it will be interesting to see how hot the debate was with regards to recent developments on the economy and on inflation, and whether perceptions changed, because it wasn't just the data that we saw movements on in between those meetings. It was also bond yields, and we've continued to see developments there since. So that's going to be the primary event this week from the US perspective. From the UK, there's two that stands out. Like I say, one isn't on the calendar. The one that is on the calendar is the BOE monetary policy report hearing. Now, that's showing us Wednesday. It's actually Tuesday that is taking place. And I think the reason for that is because on Wednesday, we have the autumn statement from the government. So not only will we see policymakers from the Bank of England being grilled by the Treasury Select Committee on Tuesday, we'll also then see the latest fiscal intentions from the government on Wednesday. And it's going to be an interesting one, because we could be less than a year away from the next election in the UK. And already there's a lot of speculation that we could be seeing tax cuts announced during this autumn statement. One of the last opportunities that the government could have, the next one being the budget in around 6 months' time, to convince the public that they should be trusted to continue to run the country after the next election. And at this point in time, they're very much behind in the polls. So a big event there from the UK's perspective on both the monetary side and also the fiscal side too. So let's take a look at how the currency pair is trading both after the events of last week and the data, and also ahead of some big economic events coming up this week too. So there's a few things that stand out on the chart ahead of what could be another pivotal week in the currency pair. One is that, as you can see, in the last month or so, we had the triangle formation following that protracted downtrend from midsummer to the autumn, and then we had a break above it. And following that, we had it run into resistance around the 200-233 day simple moving average band. We then had a retest of the top of the triangle, which also fell around the 61.8% Fibonacci retracement level, which has been removed. That was from the October lows through to the November highs prior to that retracement back, and then we rotated higher. We went through the 200-233 day simple moving average, consolidated around the 89-day simple moving average. That's the upper purple line. And now it seems that we're running a little low on momentum. Now, the level ahead is where things could get quite interesting, because we are approaching the longer term 50% Fibonacci retracement level. So that's from the July highs through to the October lows. And this is where we get a true sense as to whether the moves that we've seen since the start of October are a corrective pattern in the longer term downtrend since the middle part of the summer, or if it is actual strong rebound in the pound and a weakening in the US dollar. And these fib levels could give us some insight into whether that's the case. So from that perspective, the 50% is the next big test. Now, what makes this more interesting is that back in the summer, we had a head and shoulders formation, and I'll just draw that on the chart for you now. So you can see that it started here earlier in the summer. We had the left shoulder in June, the neckline starting then around here, the head up in the middle of the summer. And again, it's not perfect, but these rarely are perfect setups. And there's the shoulder and there's the final neckline. So the neckline of this pattern, where we actually broke below then back in the start of September, aligns with that 50% Fibonacci retracement level. So suddenly that adds a little bit of interest to that 50 Fibonacci retracement zone, because it was the neckline of a past head and shoulders pattern, which has been broken, which has been completed, and we did then see a strong move to the downside. So again, further reinforcing that 50% Fibonacci retracement zone. And even put more simply, if you ignore that head and shoulders pattern, it's actually been a strong zone of support throughout that period, because of course it was providing that neckline for the head and shoulders pattern. So I think that 126 area looks incredibly interesting to the upside, given the week we are going into. And to make this more interesting again, if we look at the momentum indicators at the bottom being the MACD with the histogram, and then the stochastic just above there, it looks as though we're starting to lose a little bit of momentum near that 50% Fibonacci retracement level. Now, this is no guarantee by any stretch of the imagination that we're going to see a rotation lower from that 50 fib. We could potentially see that, and that could be a bearish signal. But also, if we see a break above that, it could be a bullish signal. Now, this may be event-driven, it may be data-driven, one way or the other. But what's going to be interesting is how the currency pair trades around that 50% Fibonacci retracement level. And a move above the 61.8 could be a further bullish signal again, especially if it is backed by, again, that momentum. If we get closer to that 50% Fibonacci retracement level on approach to these events, and we're seeing less momentum again, that could be again another sign that people are feeling less confident going into those events, that this has the legs to turn into something more bullish than it already is. So I think the next few days are going to be really pivotal from this perspective, and the events may be a major driver in whether we move above 126 and into more bullish territory, or a rotation lower and potentially a continuation of that trend from earlier on in the summer.